Welcome back to Gold Rule Radio, your weekly recap of the precious metals markets, the news that moves the markets. And Rob, thanks for joining me again this week.
Anytime, Miles. Glad to be here.
So we're doing something that I have never done since we started doing GRR a couple years ago, and you'll notice...
Where are your charts?
I walked in here today with my cell phone, which I remembered to mute, a blank piece of paper, which isn't true. I wrote one note on top of there, and zero charts. Because when I was preparing this week's show, I looked at the metals prices, and gold has lost about half what it did last week. Right. So I checked silver to see how silver's doing, and it has lost about half of what it did last week. Then we checked platinum and palladium, and they have both lost about half what they did last week. And I'm like, interesting. I wonder what the dollar's doing. And it's bounced back up about half of what it came down last week. So it seems like we're at about like 50% reversal of the reversal from our conversation with Tori last week. And then you and I talked the week before that. So from a trading standpoint, I mean, the charts are just bouncing around in relatively normal ranges for short-term trading. Pretty much clear across the board. Even the bond yields reversed about half of what they did last week. So now on the flip side of that, from an economic, geopolitical, and discussionary standpoint, we're also coming off the lowest dollar to British pound pricing exchange, I think, in history.
It's getting close if it's not.
Yeah, the pound got down to $1.03. Now it's bounced back up a little bit.
You know, one of our clients was in town and he's having a boat built in England. And they contacted him and said, sir, our electrical bill went from 1,600 pounds last month to 16,000 pounds this month. And I'm like, what's that going to do to your boat? He goes, well, they're probably going to ask for more money, but at least the dollar's stronger than the pound. So,
I mean, arguably that is only zero more, right? They just added 1 0.
Right.
What's the big deal?
Yeah,
it's just a zero.
Yeah, I think Joe would call it just a little.
Just a little, just one little zero right on the tail end of that. No big deal. Well, and we're also seeing pretty catastrophic problems with the British pensions.
Right.
And there was something that Stoic Finance brought out, and they've been talking about for the last week or so on their show, that the Bank of England has, in Lehman-esque fashion, gone ahead and decided to reverse some of their recent austerity measures, turn the water spigots back off, and dump some money back into the bond market to try to leverage back up some losses that British citizens have been taking in their pensions here recently. And this brings me back to my question I've been asking for the last 18 months. Who is Jay Powell? Is he Volcker or is he Greenspan? And what's going to happen to the interest rates when we reach that break point in some market? Could be the equities market, could be the real estate market, could be the bond market.
Well, Powell is already really hurting Europe because we have raised interest rates as much as we have and as quickly as we have. The Europeans had to follow suit, and it's starting to break over there badly.
Right.
You're talking like 1930-esque depression type scenario. And it's we talked about this a few weeks ago, very concerned about what happens over there. Just for those people alone, let alone the fact that it will migrate here to the U.S. eventually.
Well, and Europe is facing additional potential problems. You know, Dr. Jordan Peterson, love him or hate him, was on with Piers Morgan here recently on Uncensored. And it was a fantastic discussion. I watched that over the weekend. But they dug pretty deep into Putin and Russia-Europe relations. And he brought up a very good point. You know, they've been hinting at oil pipelines throughout Europe for a significant amount of time now. A lot longer than just the Russia-Ukraine conflict has been taking place. It only takes one really cold winter for Putin to accidentally turn the oil spigots off. And now we're looking at major, not just financial, economic crisis that will end up spilling over into the U.S. and Canada, who now is shipping barges full of oil and natural gas over to Europe in the winter. So not just economic and financial crisis, but genuine life crisis.
Yeah, a real humanity crisis.
Right. So the European struggle is real. We're seeing it in England. We've been seeing it in mainland Europe, and certainly the farther east you go, the worse things get.
And the question becomes why? How did they get there? Well, you're talking about the international global elites on the left. Tulsi Gabbard just walked away from the Democrat Party yesterday.
Right.
And her statement was riveting. She said it in a way that I wish I could have said it. She said, "I can no longer remain in today's Democratic Party that is now under the complete control of an elitist cabal of warmongers driven by cowardly wokeness who divide us by racializing every issue and stoke anti-white racism, actively work to undermine our God-given freedoms enshrined in our Constitution, are hostile to people of faith and spirituality, demonize the police and protect criminals at the expense of law-abiding Americans, believe in open borders, weaponize the national security state to go after political opponents, and above all are dragging us ever closer to nuclear war." Talk about 10 pounds of mud in a 2-pound sack. That
Right.
lady is on her game.
So here's an example now where we're seeing the economic financial crisis spill now over into the political side of things as well.
Yeah.
We've politicized everything, both in this country and overseas. And there are actual major conflict taking place, obviously, in Eastern Europe. We just discussed there's China and Taiwan. The Middle East is a powder keg. It's been a powder keg for a long time, and you can say what you want about our involvement in that over the last 40, 50 years.
So the bottom line is, if you think that the entire world system is going the wrong direction, it's why we like the metals, because it takes money out of whatever financial system you're in and puts that wealth in your control.
Yeah, so don't tell Tori I'm about to say this, but I actually think we might be in a period of time where the charts do need to take a backseat to what's actually going on a grander scale of things.
Yeah.
And I agree. I want to see the price of my precious metals and any investment I have money into. I want to see that dollar price go up just like anyone else does. But if you're just focused and hyper-focused on the returns in your own 401k, frankly, you probably should be liquidating some of your positions anyway over the last 6 months. Or the direction the price of gold is going, you're still fixating on the value of the US dollar. How many dollars is my X worth? And in an era where the US dollar is declining over 8% a year stated, or what, 14, 15% a year, if you use the way they used to state it just 30 years ago. I mean, we're talking about a completely different world today.
But it's incongruent because you have a strong dollar and yet the price of goods and services here in the
Strong
US.
relative dollar.
That's a much better way of putting it, because it's strong relative to the other currencies, but what kind of inflation are they experiencing in Germany, in England, in Japan, in Latin American or underdeveloped countries? I have a feeling that the world is in far greater turmoil than we realize here in our little American bubble.
You know, Rob, I'm reminded, David McElvaney, who does our McElvaney Weekly podcast each week, I'm reminded of something he said a number of years ago while issues were taking place in Egypt. He said, you know, it's hard as Americans to not forget that a 10% drop in income or a 10% rise in expenses is very painful to a lot of Americans. But if you step outside of America, it can be catastrophic.
Life-threatening.
Life-threatening to people, where that 10% is the difference between eating and not eating. And we're seeing that 10% in America right now.
And we're seeing greater than that elsewhere in the world.
Exactly. And it's starting to expand here and expand in other first world Western countries, expand in China, expand in Japan. So it does make you wonder what's actually happening outside of some of those G20 nations.
Well, we might have 9 months. It's like when the interest rates started going up, the real estate market slowed down, but people were saying, well, it's okay, it's still functioning. But, you know, builders have about 9 months left back when rates started going up to finish their projects. But there's no new projects after that. So what you'll see is the real estate market really begin to crater coming into the winter. And there's the same delay for what we see going on around the rest of the world coming here to America. So even though we are inconvenienced and annoyed by smaller packages, higher prices, delays in delivery, etc., we are going to start seeing some real significant differences in what it was like a few years ago versus what it's going to be like in a few months.
And imagine just one really bad winter in Europe kicking all of that off. It's very convenient that Trump built up a massive stockpile of oil and natural gas, specifically set aside for our military usage if necessary. I wonder if that's going to go on sale in January.
I think it's already been on sale. Joe's been selling out of the stockpile for months now. Well, I promise we'll have charts next week, and we'll go into all the Fibonacci's and the resistance and the support and the direction. All that to say, buckle up.
Yep. Yeah, hopefully they'll change. If you want those numbers, sorry, and apologies, if you missed last week's show, the last couple weeks we have been pretty hard into the charts and looking at some of those support and resistance levels. But on a week like this where everything is just kind of cooling off from previous pricing movements, it made sense to maybe take a step back and look at the other things that may be driving it a little bit more from the political economic side. So keep an eye on Europe, especially. Everybody knows that. And that's ranging from Ukraine and Poland now all the way to England. England is seeing major economic potential upheaval, and they have decided to go right back into money printing to pave over the problem.
Talk about a pivot.
So we'll see if they pivot back the other direction. They always seem to miss that half of Keynesian economics. They love the part where when things are bad, print money, but they don't like the part where when things are too good, slow it down a little bit. Makes getting reelected a lot easier. Anyway, that's going to do it this week for Golden Rule Radio. So, as always, appreciate you stopping by. If you have any questions about your personal precious metals portfolio or would like to talk to one of the advisors like Rob or myself here at McIlvaney ICA, we can be reached at 800-525-9556. You can find more info on our website at McIlvaneyICA.com. You can find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks again for listening and have a great week.